Hi, I'm Susan Jabinski from Morningstar.com. We award gold, silver, and bronze Morningstar Medalist ratings to those funds we think are most likely to outperform during a full market cycle. However, we may increase or decrease a fund's analyst rating due to changes in a fund's process, expected performance, management, or price. Today, we're taking a look at 3 former medalist funds that have been downgraded to neutral during the past few months.
We've long had a favorable view of George Cipollini and Mark Saylor, who together have run Berwyn Income since 2007. They employed a go-anywhere, contrarian approach to this conservative allocation income fund, and they generated strong results with good downside protection, with returns coming from both asset allocation and security selection. In February 2019, the managers unexpectedly resigned. Given that this flexible process essentially resided in those 2 departing managers, it was reasonable for parent Chartwell Investment Partners to start fresh and create a whole new fund. They appointed a team to run the strategy, and while members of the team have long track records running single asset strategies at Chartwell, they don't have a public track record running a multi-asset fund in a mutual fund vehicle. The new strategy is a combination of 2 existing Chartwell strategies, a mid-cap value fund combined with a core plus fixed income fund at a roughly 30% equity, 70% fixed income allocation. This is fairly staid considering what the process was before, where the managers had an all-cap mandate and also invested in a broader range of asset classes, including high yield, convertibles, preferred, and even cash, which sometimes hit 20 to 30% of the portfolio. With a complete revamp of the process, we have lowered Berwyn Income's Morningstar analyst rating to neutral.
In February, Fidelity announced that Sami Simnagar, who has managed Fidelity Emerging Markets Fund since 2012, will be stepping down on October 1st. Now, he's had a very good record with this fund. He uses a quirky style. It's a little unusual, but it's worked very well for him. The new manager will be John Dance. Dance runs the Fidelity Pacific Basin and Fidelity Emerging Asia funds, and he has ability. We think highly of his skills. The Fidelity Emerging Asia Fund, which is the only one of the 2 that we cover, gets a Morningstar analyst rating of bronze. However, Dance has not run a broad emerging markets fund, and so for that reason there's some uncertainty here. He also uses a slightly different style than Simnagar does. It's growth-oriented, but not as much, and there's some other differences as well. For that reason, the Morningstar analyst rating of Fidelity Emerging Markets has been downgraded to neutral from bronze.
Proposed manager changes hurt USAA world growth prospects and warranted a downgrade on its Morningstar analyst rating to neutral from silver. In its current form, a proven team runs the strategy. The team has talented managers, benefits from deep analytical resources, and has delivered solid long-term results here and at MFS Global Equity. However, Victory Capital plans to move a portion of the strategy's assets to its own investment team, RS Investments, when it completes the acquisition of USAA sometime in 2019's second quarter. And this hurts the strategy's prospects for a few reasons. First, the RS Investments team is thin, consisting of just 2 managers and 1 analyst. And second, that team uses an approach that's highly correlated to the existing strategy, so it provides little diversification benefit and is not complementary. And third, USAA and Victory have not disclosed how they plan to allocate the strategy's assets across investment teams, so it's uncertain how the strategy's portfolio and risk-reward profile will look going forwards. Investors should consider other options.